Hey guys, Mike here. So I won't say, oh boy, what a day in the market. I'll say, oh boy, what a day for small caps and micro cap stocks. Haven't we been talking about that? And also regional banks there, wink, wink. Ooh, all the stuff that was weak. And we asked, is there going to be a technical bounce? Would there be a technical bounce? Of course there's a technical bounce. Guys, it's a soap opera, right? It's a show. You got to continue this thing going on. Do you have any idea what would happen, as I showed you in the charts, if you started breaking down? I'm not saying it won't happen, of course, but if you broke down those certain levels, how many algos would kick in and start selling this market off like a madman? And the market makers can't have that because there's too many puts out there. They're like, we can't pay this out. So of course you're going to get your technical bounces, right? Because the majority of the time the market likes to do what? It likes to go up. Even when you get news out like we got this morning, didn't affect the market one bit, right? And I'm going to show you what I'm talking about on that. Actually, there's 3 bits of news that came out. And one of those, I'm going to pull back the curtain for you because I know people leave this part out. They'll look and go, oh my God, look how bad this is for the consumer. And then you look behind the curtain and you go, oh, I guess historically it really isn't that bad. So I'm going to show you that, and we'll go into some charts about some stocks that actually are starting to break out. So watch out for them. But, right out of the gate, you got the U.S. Empire State manufacturing data came out. This is the one that popped up in the positive last time. People were like, oh my Lord, look at it. And today it had like its 3rd worst drop in the history of this index. I mean, it dropped to negative 31. It was positive last time. Again, this ain't the one I'm going to be looking at. I'm going to be looking at the Philly one. I think people pay more attention to that because that is a more manufacturing type area. So we'll see. But it didn't matter because that didn't affect the markets a bit. The other news, that's coming out, what you're seeing is a lot more bankruptcies, right? So we knew about this. So it says repeat bankruptcy filings accrue at fastest pace since 2009. And you can see right there is the pop, and you scroll over, and that's 09. So 09's outdone it so far. But, this shouldn't be a shock just because there are a lot of zombie companies that were created over the last 10 years. If you don't know what a zombie company is, guys, it's basically, I'll just read it for you. Zombies are companies that earn just enough money to continue operating and service debt, but are unable to pay off their debts. Such companies, given that they just scrape by meeting overhead, which is your wages and rents and stuff like that. But more importantly, at the bottom, you can see they are especially dependent on banks for financing, which is fundamentally their life support. And how these companies got created obviously was when they put the rates to 0 after 09 and kept them almost to 0. They just started taking out debt like crazy. Everybody was opening companies. Here we go. And of course, one company sees this, another company sees it. They start scrolling it and running to the bank saying, yeah, here we go. And they're not making any profit. They're not going to be profitable, really. And so these are the companies where now you're going to start seeing them fall to the wayside, especially in this environment. That's why I highlighted the last part. They really need financing just to make payroll and all the basic stuff. And so it's going to be really hard with the stress on the regional banks. And so they want to do a lot of loans to these companies because the bigger banks wouldn't touch them with a 10-foot pole, most likely. And so we'll continue to see this again. And so, really, what does that affect? That will have more an effect on the economy because those people that work there, most likely a lot of them are going to lose their jobs. So, which sucks. But I mean, that's what you're talking about. It'll affect the consumer more than anything else. Stock market ain't going to really matter. You ain't even going to notice them, to be honest with you, maybe on certain indexes, but you ain't going to notice these companies. The SPY and the big companies are the one leading the way in the stock market, but we'll start to feel it more in the economy part. But that takes time. Again, it takes time. Now, the other data that came out about us was, every month or whenever they release this, ooh, look, we're taking on more debt. All right, we eclipsed 17 trillion now, and you can see this is non-housing debt, and then of course the big portion is housing debt. And of course that sounds bad on its face, like, oh my Lord. And of course when you look at delinquencies, yeah, they're going up. Especially, remember I told you the 90 days is the one you want to start looking at. You compare, a year ago, and yeah, I mean, everything's going up. Mortgage debt, home equity lines of credit, delinquencies, student loans actually went down. Why? Because we don't have any student loans to pay right now, right? Auto loan debts, credit card debts, and pretty much all of them, right? So yes, delinquencies are definitely going up. But again, when you take this debt on its face value, you have to look a little bit deeper in this right here, right? And so what do you know is happening? People are making more money and stuff. And so when you look at the household debt service payments as a percentage of disposable personal income, here's the dot-com bubble recession, here's the 2008 recession, and you can see between 12 and 13%. Right now we're sitting around 9.5%, right? So historically, or at least the last 23 years, that's low, right? So that's what's keeping everybody afloat, is this right here, is all that extra cash we got on hand that we got saved away, the extra earnings we're earning from our jobs and stuff. And so that's, when you look at it that way, you go, oh, okay, I kind of get why delinquencies aren't worse than what they are, and we're not seeing like this '08 effect and things like that. Again, it's not a problem until it's a problem, right? And it'll come fast in a hurry if that becomes a problem. And of course, one reason it's not a problem is we just don't know what's going on with student loans, right? I mean, the courts are hearing this. The Supreme Court is taking this case up. And so, when are student loan payments going to be coming back into effect? There's been a few different answers, but the truth is we just don't know right now. And when you take out the third largest payment in a lot of people's households, it definitely helps put a buffer out there in the economy, and allows us to keep spending, because that's $300 to $500 every month that we can put into groceries and trucks and cars and watches and whatever else, versus just paying student loans off. And if you're liking this video, guys, please hit that like and subscribe button. That will be the thumbs up right below the video there. Just go ahead and hit that for me. I sure do appreciate it, and all your support. And if you like this kind of content, think about subscribing. And so that's the problem when you're trying to, figure out, well, where's the economy heading and stuff, is you don't have the full part of the equation. You're missing pieces of it, right? And so trust me, the landscape will change if a bunch of people don't get their student loans forgiven, and all of a sudden an average bill of around $350 starts hitting a lot of households. And I'm talking about millions of people having to start paying that back. That's a lot of money, that's not going to be spent on the groceries and everything else, and just going to pay student loans. So that is a form of liquidity, right? Okay, that's what's happening right now. And also, a lot of people didn't realize that there's a lot of COVID policies still in place, like rescue plans, that are still helping people out 3 years later, right? Still out there. Janet Yellen, she's still trying to drain that treasury account, creating liquidity in the market and stuff. So there's just a lot of stuff out there. And again, the interest rates, whether they pause them, whatever they want to do with them, we just got to see. It's going to take a long time, right? Months, whatever you want to call it, to see how that's going to affect the economy. We see how it's affecting the businesses that aren't profitable, and they're filing bankruptcy, but and that'll continue to happen. And other companies will start continuing to lay off, but we just got to see how it's going to affect it, right? That's what we got to figure out. And so going into the charts, it was all about the Russell. Forget the SPY and the Qs. I mean, they were up slightly green, 0.2 to 0.4%, but the Russell was up like 1.4% at one point in time. It actually broke through DEM, stands for daily expected move, which I do for the members and stuff. And so when you look at that, it already broke through its daily expected move. Again, what happened? Now you got the IWM out pacing the SPY, but what happened? You got that technical balance we talked about, right? Are we going to get the technical balance? Yes, we got the technical balance. Look at that. IWCs, the micro caps, it takes like the smallest companies on the Russell 2000. And of course, did it end up getting a bounce? Yep, that was a very important balance right there, not to fall through there. And these are the companies that haven't been participating, right? The stocks just haven't been participating in this rally and stuff, right? And so then, of course, when we talk about consumer staples versus the SPY, right? The equal weighted SPY. And so what was down today? Consumer staples. What was up? The market, right? And so that's something you're seeing. The dollar, what did it do? It sold off pretty much all day, slowly but surely. What happened to the market? Went up, then kind of ground sideways for a long time. What else was up? Ooh, look, regional banks up double digits, right? So all those weak points today magically all started going up, right? Now some stocks to watch. Again, China is stimulating their economy, ordering their banks to lower their rates and get that money out there on these loans and stuff. And so watch out for this one to pop. We've been through this multiple times. You can see it right here on the chart. All of those pops were basically, hey, look, it's going to be a stimulated economy in China. They're going to recover. And then, of course, BABA and all the rest of them, all the Chinese stocks were up today. So just remember, not just BABA, but that's what's happening right now. NVIDIA still in this rising wedge, still going up. It had a green day again today. Micron, I told you about this Saturday. Watch out, because I said there's a very important level right there around the 64 level. Could it be the next semiconductor to break out after NVIDIA and AMD? And of course, what happens? It absolutely broke out today. As you can see right here, finally got above there. Right around the end of the day, it was around 3 o'clock, I guess, it finally started moving up. So we'll see if we get a back test of that level and then resume up. So it's just another semiconductor that's trying to break out. Google, trying to continue to break out, but it's getting stalled out around that 116-ish level right there, as you can see. So that area is got a pretty good bit of resistance to it. We'll see those. They're just consolidating right now. Try to see if you have that push. It didn't leave a gap right below there that was put in there Friday. So we'll see if it wants to come down, fill that first before moving up. But this one's still bullish right now. They'll keep saying AI about 30 times a day, which will probably help it. But of course, the other thing you're still seeing, this came out today, on the NASDAQ Composite Index, again, moving up, but at the same time, when you look at the percentage of members above a 200-day moving average, you can see it not really doing anything, right? And so that's not increasing, but the index is, because again, those large stocks just continue to grind up. Now, going into earnings, you can see right here tomorrow, we're going to have Home Depot, C Limited, of course, PaySafe's probably the only three I would be paying attention to. But I want to bet they're small. A lot of those are smaller companies, and those smaller companies are going crazy today. Now, looking at the economic news, you're going to have a ton of Fed presidents, just like you did today. We're going to get retail sales out there year over year, month over month, so people will pay attention to this. More manufacturing and industrial production information will be coming out. I don't think it's going to affect the markets a single bit. NAHB Housing Market Index, people like to pay attention to. They're seeing no difference in that right now. Again, like I said, you're going to get a bunch of different presidents. Like every 15 minutes, it seems like one of them will be speaking. Another thing to keep in mind is this is OPEX, right? So this is the third Friday of the month. A lot of options are going to be expiring. You have the VIX options expiring Wednesday, and then the rest of them will expire on Friday. So you tend to get some very interesting movements in the market sometimes, but also frees up the market sometimes to actually move more freely in either direction it is, depending on what happens. But I think another thing is the president will speak tomorrow about the debt ceiling, see if they actually come up with something. I don't know, they're politicians, so it'll probably be a lot of more drama is what I kind of expect before they come up with the final, who's going to, basically blink first kind of thing. So, we'll see on that. Neither side wants a default or anything. But again, I'm not really worried about the leaders. I'm actually worried about the smaller, more unknown politicians that are really extreme left and really extreme right holding out on something. So that's really the one thing you got to be very careful about when it comes to this one. It's kind of going to be an interesting next 2 to 3 weeks. So anyway, guys, hope you got something out of it. Hit the like, subscribe, and if you did, let me know how your day was in the market, and I will see you tomorrow.